Hello and welcome to Got Stocks. Today, Google is getting hammered. So we want to take a look at some of the fundamentals, and then we want to look at technical analysis to see when is a good time to buy this incredibly great company. So buckle up and enjoy the ride. Let's minimize this guy here. Let's get him out of the way. September of 2023, the market cap was 1.6 trillion, and if we look currently, 2.5 trillion. Forward PE is 23, which is relatively low in a bull market. Is the 52-week high is 205 versus the low is 130. Now we want to pay attention to these two numbers here, the 50-day moving average, which is 187, and the 200-day moving average, which is 174. When we get to the charts, we're going to take a look at that, and I'll show you why that's important. Also, what is important is we want to take a look at the average volume. So the 3-month daily average volume is 27 million shares traded per day, and the 10-day average volume is 27.52 million shares traded per day. This is also important because we're going to compare that to today's volume and why the stock is getting hammered. 80% of the stock is owned and held by institutions. Fidelity's, Charles Schwab, Edward Jones, Merrill Lynch. There's just to list a few. There's tons of them. But the institutions believe in this company because the company just makes a boatload of money. They have a ton of money on the sidelines. They are a very important factor of AI. And actually, Google is actually proud of DeepSeek for what they've done. So I'm sure you're aware of DeepSeek. They've taken old servers and they've copied ChatGPT and they've managed to replicate it, improve upon it a little bit, but at pennies on the dollar. But here's something that you want to think about. Google, Microsoft, Meta, and Apple. These companies have so much money. They are the future of AI, and they will be happy to sell DeepSeek their old servers. So when these companies, they're going to stay current with all the new servers, all the new technology, and there's a place in this world for DeepSeek. These guys aren't any smarter than us, or we're not any smarter than anybody. We're all the same. We're all humans, and this is a global economy now. But they do get credit because they're recoded ChatGPT and improved upon it, and that's a good thing. Alphabet, they are a global economy. Europe, Middle East, Africa, Asia, Canada, Latin America. The company's a global company. They're making a ton of money, and some of the service that they offer, Android, Chrome, Gmail, Google Drive, Google Maps, Google Photos, Google Play, YouTube, just to list a few. So the company is making a ton of money. They're not going anywhere. Now, they're not going to give you that 2, 3, 4, 500% returns that everybody wants so badly. If you want a good, solid company that's going to give you good, solid returns over the time, Google's a great company to consider. Let's take a look at the charts. So when you're analyzing a stock, you want to look at the fundamentals. Now today, the stock is getting hammered, but you want to look at the technical analysis to see when is a good time to enter. This is an incredibly great company. They're making a ton of money. So let's take a look at the technicals to see when is a good time to enter into this incredible company. Let's shrink this guy up a little bit. Let's get him over there. We're currently looking at a 20-year monthly chart. So each candle represents 1 month. As you can see, this company has done nothing but go up. Now, this period here, we had a meltdown in the entire market, and all of the stocks get hit during a bear market. And as you can see, it's recovered, and we're in the all-time high territory, with the exception of the downdraft today. But we're going to get a little more granular here. Let's take a look at a weekly chart. So this is a 5-year weekly chart. As you can see, we've had a nice updraft. We're in a bear market in 2022 from January to September, and we've turned around. The stock has gone straight up, and you're going to have these correction periods as the stock continues to rise. They're not going to go up forever. Here's something you want to think about. And this is just based on an average. So the stock market is going to have retracement periods in the 10% range twice a year. And then once every 2 years, it's going to have a 20% decline. And you will have a market crash. There will be another market crash. Nobody knows when that's going to happen, but these are buying opportunities. You want to invest in your 401ks every pay period. We're currently looking at a 1 year. Each candle represents 1 day. So as you can see through this area here in July and August and September, Google was in a major downdraft. When you see major gaps in stocks, these are correction periods that are happening. Now we are currently looking at a 6-month daily chart. So every candle represents one day. As you can see, yesterday, the stock reached an all-time high of 207.05, and today the stock has gapped down, and we are currently trading at 190.69. That's a pretty substantial drop overnight. What we want to look at now is where the stock is trading. Went down and touched the 50-day moving average. The black line is the 10-day moving average, the purple line is the 21-day moving average, the green line is the 50-day moving average, and the red line is the 200-day moving average. These are benchmarks that you want to use when you are investing in the stock market and you're buying individual stocks. The estimate was $2.11 and the actual was $2.15. So they actually beat the street, but they got hammered. But what you want to look at is this area here. This stock gapped up a pretty substantial gap up, and if you come over to here, there's going to be symmetry in the marketplace. Here's your gap up, here's your gap down, and it's currently trading at the 50-day moving average. Now if you look back here, the stock did trade at the 200-day moving average. So the stock in the past year has traded at or below the 200-day moving average. So it's very possible that the stock can come down and fill this gap, substantial gaps to the upside. You're going to see a substantial gap to the downside at some point. So essentially, if you're looking for long-term and you wanted to buy into this stock, you can start buying in at this point at the 50-day moving average. The other area would be looking at this range right here, 176.26. And that 200-day will eventually rise up into this area. But these are areas that you want to look at if you're looking to invest in this company for long term. Google is a great company. It's not going anywhere. As you can see, this company has made a lot of people a lot of money over the years. Going forward, this company is so large that it's hard for them to move the needle as far as the exponential growth that you will see in smaller companies. But if you're looking for a good, solid company with good, solid returns over the time, this is a great company to invest in. Thank you for tuning in. I hope this was helpful. And always remember, the stock market is very risky, so you always have to do your own due diligence. And always remember to dot your I's, cross your T's, and don't forget the Z. God bless and happy investing.